The housing market has been flying high, but will higher mortgage rates cause the market to crash and burn? We explore that in this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, anyone who's tried to buy a house in the past year knows how difficult it is to even find one. And if you do, you will likely be paying way more than you like to pay. It is a seller's market. One of the factors driving demand for housing has been low mortgage rates. Well, that variable changed earlier this month as 30-year mortgage rates jumped to their highest levels in more than 10 years, following the Federal Reserve raising the short-term borrowing rate. That has some people claiming we have a housing bubble that is about to pop. Well, we believe that is likely an overly sensational take on the situation. Will higher rates cause some people to rethink buying a home? Sure. But rather than a bubble bursting, we should probably think of it as some air being let out of the balloon. Let's put some math behind it. Several months ago, a home buyer would pay about $1,347 per month on a $300,000 loan if they got it at 3.5%. Well, this month, a buyer would be locking in a rate of about 5%, which would increase their monthly payment by $263. Now, for some, that will cut into discretionary spending enough to change their decision. But certainly not all people will be frightened away over that kind of an increase. If that buyer is a first-time home buyer, they may really think twice now. However, if a buyer is also a seller, they can offset some of that monthly increase in mortgage rates with existing home equity. And here's another factor. Get this, in 2021, all cash sales were roughly 30% of all U.S. home purchases. One of the reasons? The rising median age of repeat buyers is now 55. These buyers are coming to the table with a higher net worth. If borrowing costs continue to go up, we might see more people buy with cash. And then there's the inventory. There's still not enough homes available for buyers. According to Redfin housing market data, inventory of residential homes is at all-time lows. In fact, at the current sales rate of existing family homes, the entire inventory would be depleted in less than 2 months. Will home builders catch up with demand? That's hard to say. Lack of labor and the high cost of raw materials are weighing on builders, but the increase in home prices are certainly a big incentive. And finally, let's look long-term. Demographics support the housing market. According to the latest data from the National Association of Realtors, the median age of first-time buyers has risen to 33. If first-time buyers are waiting longer, they likely have more money thanks to wage growth and savings rates. Bottom line, higher mortgage rates could cause buying to slow down. But other factors are still driving demand, and that should continue to keep realtors and bankers busy. Thanks for listening.